All right, so part two of the selling covered calls strategy here is interesting. I just got done doing the first part of this, and since then the price of Walmart has gone up to 94.41. So let's do this, and we'll just say current price 94.41. So the price has gone up by 50 cents a share. But watch this, the option now. So Jake bought my option for 406, so literally 30 minutes ago. Jake bought my option for 406, but now the price of Walmart has increased by, like I said, 50 cents. Now those same options are selling for 3.86. All right, so Jake paid a 5% premium over what he could have paid right now, because the price of Walmart has gone up and has gone closer to the strike price. We'll talk about this in just a second. But that's how volatile and volatility in the stock market creates option opportunity and losses. So Jake is down 5% on that option just right out the gate. Or conversely, I'm up 5% of that option just right out the gate. So what I would do, if I was watching this like a hawk, I'd close that sucker out. I'd take the 5% gain in 2 seconds flat. I'd say, all right, now I literally, I don't know what the commissions are. I don't know anymore. But just in the back of your mind, you say, wait a second. So I sold a covered call to Jake at 9:33 a.m. this morning when the market was just all deep in the red. I sold it to him at $100 a share. That's the strike price at $100. It was out of the money in June 2019. So I knew for a fact what my upside limit on my Walmart was going to be. I knew that if the Walmart went to $200 a share, I would only get from $93.79, the share price at the open of business, to $100. And then Jake would get anything above $100. I'll talk about that again in just a second. But what happened was, so I sold it to Jake for $406. So he's giving me $400 to have the right to take my 100 shares from me, to call my 100 shares away from me. He's going to call them away. So he paid me $406 on that 100 shares to exercise the right to have that right to call those shares from me. But in the interim, since old Josh was just yapping on his video, the price of Walmart went up by 50 cents a share, which means the option price, that same exact option which Jake just bought from me, went down to 386. 386, which means Jake paid a 5% premium literally 30 minutes ago above what he could have paid today. So what I want to do now is I want to take my $406 and I say, okay, thank you, Jake. And now I'm going to take $386 and close out the position. I don't want to have Jake having that option anymore, and I'll just go ahead and pocket that 5%. Let's say it's 1% total commission. I don't know. I'm going to go ahead and pocket a 4% gain just like that. And that's where people get sucked into the allure of options. Like, man, because what happened here? There is a big if. What happens if the market went against me? Well, and this is where selling covered calls actually works well. We'll talk about that too. But that works real well. I just pocketed a 4 to 5% return on my Walmart shares, just like that. Not too shabby, because the price of Walmart went up from when I sold it. All right, now if the price from Walmart went down, what do you think? Let's just see what it's doing right now. So this is where it gets kind of fun. And I can see how people get lured into day trading, and I just don't think you should. So Walmart 94.44, so it hasn't done much. Gone up 3 more cents. So, I mean, that's going to go down even more. So that's with another thing, too. I can also sit there, Josh, and say, I just sold the option. If the price of Walmart keeps going up, now it's 94.44. Let's say it goes to 95. If I hold on tight and not close out that contract with Jake, this could drop down to 2. Let's just say it drops to 2. I'll pay $200 to close out the option contract where I sold it for $406. I just made $206 just like that with no more risk. In fact, if anything, I took less risk. Not if anything, we know for a fact when he's selling a covered call, you're taking less risk. No one's going to argue that. If you're selling a covered call, you are inherently taking less risk, because risk is simply money at risk. My money at risk has been reduced by the premium that I generate from the Walmart shares. And so again, money at risk is all that matters here. Money at risk, which is why selling covered calls is actually a risk mitigation strategy. Some people use the term buy right. BUY, not RIGHT, WRITE, because you're buying a share, 100 shares of Walmart, a round lot, and you're writing an option contract. You're selling a covered call. So you're writing a contract. I call it selling. Some people call it writing. Again, not riding or writing, R-I-G-H-T, but writing, like you're writing something on a piece of paper. So buy-right strategy. You see some mutual funds out there that say, the buy-right strategy from T. Rowe Price or something like that. I don't know. And so that's how the volatility of Walmart or options can work real well in your behalf or against you here. So Jake is now down 5% on his option contract. And again, if I were to close that out at 3.86, I would have pocketed that difference, that 5%, which is pretty good. But now I'm in a world of hurt, not a world of hurt, but I could, if I said, oh man, I should have held on, because as Walmart keeps going up, the option price keeps going down, which means I would have made more money by waiting to close it out. So, all right, let's just one more time here and see. Oh, now Walmart's at 94.47. Bear with me just a second, and let's see what the option contracts are doing there. We're looking at June 2019 at 100 is the strike price and 3.86. So, all right, so they haven't changed much, still 3.86. But you can see how this works for option contracts. So, all right, let's take a break. I want to come back and show you in reality. We're not going to do the market timing stuff here, but I want to show you in reality what will work with Jake and Josh and who's going to win in this game. We don't know, but I'll show you in terms of my own past how this worked. So we'll see. Don't forget to subscribe. We'll see you in here in just a second.